All right, traders, listen up. Bitcoin's doing what Bitcoin does best, making noise, breaking out, and leaving skeptics choking on dust. But what if I told you what's happening right now? It's just the warm-up. In the next 10 minutes, I want to show you exactly why crypto is going vertical, why smart money isn't selling a single sat, and why 2026 might be the most explosive year Bitcoin's ever seen. Stick around. This isn't just another hype video. This is your blueprint. Let's rewind for just a sec. April 2024. Bitcoin's having hits. Supply gets slashed in half again. Block rewards go from 6.25 to 3.125 BTC. And for the first time ever, Bitcoin's inflation rate drops below gold's. That's right, BTC is now more scarce than the yellow rock we've worshipped for 5,000 years. Now fast forward to October 2025. Bitcoin's not just up, it's ripping. Price just kissed $125,000. ETFs, absorbing supply like a black hole. Institutional flows, floodgates, open. Inflows to U.S. spot Bitcoin ETFs have topped $58 billion. That's not retail hype. That's BlackRock, Fidelity, and the rest of Wall Street pouring in. By the way, BlackRock's iShares Bitcoin Trust, it's already the fastest growing ETF ever. Period. They've stacked over 100,000 BTC in 14 months. That's more than most countries. But here's the kicker. While price is mooning, over 60% of Bitcoin hasn't moved in a year. Hodlers aren't flinching. Long-term conviction is through the roof. Still think this is a pump and dump? Keep watching. Let's talk on-chain data. Active addresses? Transfer volume? Realized profits? Yeah, 97% of supply is now in the green. You heard that, right? Almost every coin in circulation is sitting on gains. But here's the trick. Those coins aren't moving. Supply on exchanges is at multi-year lows. So when the buying comes in, there's barely anything for sale. Add in the ETF vacuum, and you've got a supply squeeze unlike anything we've seen before. Meanwhile, miners? Still stacking. Hash rate? All-time highs. We're talking 1.44 zettahashes. That's network security on steroids. And even after the halving, miners aren't capitulating. They're upgrading rigs, plugging in hydro, geothermal, flared gas, whatever it takes. So price going up? Not an accident. It's structural. It's math. It's game theory. Now let's zoom out to the macro. Real yields, still above 1.5%. But they're trending lower. The Fed's in a holding pattern, but let's not kid ourselves. Recession signals are flashing. Global M2 is stabilizing. And DXY, the US dollar index, is down 10% this year. Translation. Liquidity's coming back. Risk on is back. And Bitcoin loves easy money. Need proof? Look at the data. Every major BTC rally in history happened during periods of monetary expansion. The 2017 bull, post-ECB QE, the 2020 rally, COVID stimulus, and now we're entering a new easing cycle. Analysts expect the Fed to start cutting in 2026. That's rocket fuel. Now here's the part most retail traders miss. Bitcoin isn't just riding macro tailwinds. It's also dominating in relative terms. BTC dominance, 64%. Stablecoin supply, growing again. Spot ETF flow, relentless. Open interest on futures, surging. But watch this, funding rates are rising too. Positive funding means more people are paying to go long. That's bullish, but here's a warning. Too much leverage can kill the rally. We saw it in October 2025. $19 billion in futures got liquidated in 24 hours. Boom, Bitcoin drops 15%. But you know what happened after? It rebounded fast. Because this time, the buyers weren't gamblers. They were allocators. Strategic capital. People who don't flinch on volatility. Now let's talk about 2026. What are we walking into? 3 scenarios. Base, bull, bear. Let's break each one down. Base case. Bitcoin stays strong. ETFs keep attracting inflows. The Fed begins easing. Real rates drift lower. BTC trades between $120,000 and $180,000. Volatility stays elevated, but nothing crazy. Think higher highs, higher lows. ETF AUM doubles. Stablecoin supply keeps growing. Traders? You'll have multiple swings, buy the dips, sell partials, rotate with funding. Bull case. This is where things get spicy. Picture this, Fed cuts hard. QE returns. Institutions FOMOing. A sovereign wealth fund or pension fund drops $1 billion into BTC. ETFs go parabolic. Price surges past $250,000. Retail piles in. Lightning Network gets real adoption. Mainstream media screams new paradigm. But careful, euphoria kills. In this case, be ready to take profits. This will feel like 2017 on steroids. Metrics to watch? MVRV Z-score hitting red. LPR peaking, address growth going vertical. That's your sell signal. Bear case. Inflation comes back. Fed stays hawkish. Real rates stay high. Liquidity dries up. ETF flows stall. Maybe even outflows. A stable coin depegs. Or a regulatory curveball hits. Bitcoin draws down to $60 to $80,000. Maybe retests $50,000 support. If that happens, don't panic. Watch LTH metrics. If supply and profit drops below 80%, capitulation starts. That's your buy zone. Bottom line? Most likely, we stay in the base case. But the setup for the bull case? It's real. And the risk of the bear? Manageable if you're paying attention. So how do you trade this? First, know your metrics. I'm not talking price action alone. I'm talking on-chain. Watch stablecoin inflows. If USDT and USDC start pouring into exchanges, brace for liftoff. Monitor ETF flows. If weekly net inflows cross $2 billion, it's game on. Track long-term holder behavior. If they start selling en masse, be cautious. If they keep stacking, relax. It's not over. Use funding rates. When they go extreme, prepare for mean reversion. When they're flat or slightly positive, trend is healthy. And don't sleep on minor flows. If they're sending coins to exchanges, ask why. If they're holding, they're bullish. Now let's get tactical. Want to trade around this? Try this playbook. Accumulate spot BTC on major dips below the 50-day moving average. Use perp futures for short-term plays, but hedge with options when open interest gets overheated. Watch BTC to deep Bitcoin dominance. If it surges, alt season is delayed. If it stalls, rotate into ETH, sell, or high beta plays. And above all, respect the trend. This market rewards patience, punishes panic. Before we wrap, let me drop a reality check. Bitcoin has now gone from being a nerd's experiment to a $2.5 trillion global asset held by governments, banks, hedge funds, and your cousin who just got a ledger. It's outlived Silk Road, China bans, Mt. Gox, Terra, FTX, and Janet Yellen's speeches. And it's still standing. By 2026, we may be looking at Bitcoin the same way we looked at the internet in 2003. Early, disruptive, inevitable. So ask yourself, are you just watching or positioning? If you found this breakdown helpful, smash that like button. Subscribe for real crypto intel, not hype. And drop a comment below. Where do you think Bitcoin's headed by 2026? $50K. $250,000? Higher? But wait, we're not done. Let's go bonus round. Here are 10 catalysts you must monitor in real time. The Fed announcing a rate cut or liquidity injection, a sovereign fund announcing BTC exposure, major stablecoin legislation or regulatory clarity, ETF expansion into Asia or LATAM, corporate treasuries announcing BTC buys, breakthrough in Lightning Network adoption, minor capitulation event, stablecoin depeg, especially USDT or USDC, whale transfer spikes in on-chain data, options market skew flipping bullish. Each of these could tilt the next move. All right, fam, that's your full spectrum blueprint. Bitcoin 2026 isn't about luck. It's about data, timing, and execution. I'll catch you in the next one. Until then, be sharp, stay liquid, and never trade blind. You got this.